Nobody warns you that the day you sign your first life insurance policy, you're essentially making a financial bet you hope you never win. And the crazy part is, most people spend more time picking a Netflix show than understanding what they just agreed to for the next 30 years. Here's the thing, the agent sitting across from you with a friendly smile and a glossy brochure doesn't mention there are two completely different worlds of life insurance, and they're selling you the expensive one first. Term life and whole life are not the same animal, and confusing them is like buying a mansion when all you needed was a storage unit. When most of us are young and finally adulting, someone, a parent, a coworker, a cousin who just got licensed tells us to get protected, and we panic buy whatever sounds official. The urgency feels real, but the product we end up with often serves the salesperson's commission more than our actual family's future. Let's talk about whole life insurance, the product marketed as a savings vehicle and wealth builder, which on paper sounds incredible. In reality, for most middle-income earners, it's like paying first-class prices for a seat that arrives at the same destination as coach, just with more paperwork. The math is quietly brutal when you break it down. A whole life policy might cost you $300 a month, while a comparable term policy covering the same death benefit might run $30. That's a difference that, invested elsewhere over 20 years, could become a genuinely life-changing sum. The agents aren't lying to you. To be fair, whole life does accumulate cash value. It does have tax advantages, and for certain high net worth estate planning situations, it genuinely makes sense. But for a 28-year-old with a mortgage and 2 kids, buying whole life is often like using a sledgehammer to hang a picture frame. Here's what history tells us about financial products. Sold with complexity and urgency, they almost always benefit the seller more in the short run, and the buyer has to do the homework to flip that equation. Every decade produces a new generation of first-time buyers who learn this the hard way, then spend years doing a slow, expensive policy swap. One of the biggest misconceptions is that more life insurance always means more protection, when in reality, the right coverage amount is a boring, calculable number based on your income, debt, and dependence. You don't need a crystal ball, you need a spreadsheet and about 45 minutes of honest math. The other thing nobody tells you is that your health at the time of application locks in your rate forever, which means the 25-year-old you who procrastinates for 3 years is literally paying more money for the same product than the version of you who acted earlier. Underwriters don't care about your intentions, they care about your cholesterol, your blood pressure, and whether you've visited certain doctors in the last 5 years. So what's the actual move? The disciplined, rational play that boring but wealthy people make? Buy term, invest the difference. It's a phrase so simple it sounds like a bumper sticker, but it is backed by decades of financial research and the quiet success stories of people you'll never see on Instagram. The practical lesson is this: get clear on your need, calculate the number your family would actually require to survive and thrive without your income, and then buy the simplest, cheapest policy that covers that number for the period you need it. Discipline here isn't about being brave, it's about being boring on purpose. There's also a psychological trap worth naming, which is that buying a complicated, expensive policy feels more responsible, more grown up, more like you're really doing something. But sophistication in personal finance almost never comes from the most complex product. It comes from the most consistently executed simple one. If you already have a whole life policy and you're sitting there slightly uncomfortable, don't panic. Review it with a fee-only financial advisor who has no stake in what you decide. Sometimes a policy conversion, a surrender, or even just adjusting your coverage is all it takes to realign the strategy with the actual goal. At the end of the day, the best life insurance policy is the one you actually have in force when something happens, not the perfect one you were still researching. Buy it, review it annually, size it correctly, and let the rest of your financial energy go somewhere it can compound. And if you're ready to take the next step, whether that's real estate investing, home contracting work, or finding the right lenders to help you build long-term wealth, check out our links in the description below.